This market is getting a lot of accolades for the strength of the trend, the fact that most stocks are participating to the upside. I think you sort of characterize yourself as somewhat neutral on the indexes. What brings you there?
Well, that's right. The short-term momentum is to the upside right now behind the major indices, but we expect that as soon as the likes of NVIDIA falter, that we will have a bit of a problem, meaning that sentiment can be considered overly bullish or too greedy. That's the fear and greed index for one. It reached 75%. That's an extreme reading. And that makes it harder for the market to uphold overbought conditions, which are in place across timeframes. So we are looking for a pullback or even a more significant corrective phase in Q4 for the S&P 500 to mark the start of a more range-bound environment. It is supported by the VIX, which has sort of entered a newer, higher volatility cycle. The momentum is to the upside behind the VIX. And also we have some signs of long-term exhaustion. You know the DeMark indicators well, Mike, and the DeMark indicators show signs of exhaustion that we really haven't seen for the market collectively since late 2021. It's not to say we're getting into a bear market cycle, but it would enhance the possibility that we do get into a choppier environment.
Interesting. And Katie, do you give credence to people celebrating things like banks leading and cyclical stocks doing better than defensive stocks, either for the macro signal it's sending or that those could become perhaps leaders down the road? Maybe that doesn't help the market cap weighted indexes all that much, but I wonder your thoughts on that.
It's been a nice move from the financial sector, and that certainly contributed to what we've recently seen from the S&P 500. I would say it's too early to suggest that we have any kind of breakout in relative strength terms for financials, so we can't be convinced that this is a lasting phase of outperformance. Most of our metrics suggest that financials will be more inline performers and that actually cyclicals may in part rotate out of favor depending on what you're looking at. The real key here, of course, is that the mega cap heavy sectors and the mega caps included, of course, are poised to sort of lose their leadership stronghold to a greater degree. And I think that's the problem that the market faces.
Yeah, that's a good point. I mean, it's clearly a more stable market, more reliable when the mega caps are working. And I guess on that point, Russell 2000 making another upside try, close to 2,300. It's up 1.6% today. What does that tell you about whether it's in fact sustainable?
So for the small cap sector or segment of the market, we've seen a little bit of a relative strength shift. But if you look at the long-term trends, they're still to the downside in the Russell 2000 index versus the S&P 500. And we also do not have a breakout of any kind in the Russell 2000, which is still sort of stalled below resistance from the summertime highs and beyond. So we don't feel like we have an action item there on the small cap front, not yet. But we are looking for the phase of underperformance to give way to something a little bit closer to inline, and that could just mean neutral trading as well for the Russell 2000.
And then maybe a quick word on bonds. The Treasuries look like they might be getting some upside momentum and yield. They backed off this week. What do you think there?
I think that we have an entry point, in fact, in the likes of TLT, which is a proxy for the Treasury bonds. We feel that there's signs of downside exhaustion, short-term in nature, but within the context of a gradual long-term uptrend that was associated with the big turnaround for fixed income proxies. So we do feel like we have an entry point, at least short-term, if not longer-term, for Treasury bond proxies like TLT. And in following, of course, we are looking for yields to stall. We don't think there's going to be dramatic downside here in the very near term, but they've had a great up move within the context of a cyclical down move, so we think it's going to tire out here.